Okay, so once again, good morning. So this time it is very controversial, no? The regulations and taxation issues, no? Um, of course, tax law in the Philippines covers national and local taxes, no? National taxes refers to national internal revenue taxes imposed and collected by the national government through the Bureau of Internal Revenue. And local taxes refers to those imposed and collected by the local government. And the Tax Code of 1997, revenue issuance and BIR rulings no, pertaining to national taxes are posted, of course, in the BIR website. So to give us more details about the topic, let us all welcome Sir Aldrian. Go ahead, sir.
Hello, good morning, Dean, and good morning, classmate. Today I'll be discussing about the regulation and taxation issues. First slide po. Next slide po. Okay, first, principle of taxation. There are the fundamentals of basic truths on which our tax laws must be based upon. Uh, There is a careful analysis, thorough discussion of why taxes should be implemented, and there are governing principles which our tax laws are guided. Ang first po ay yung fiscal adequacy. Funds generated must be sufficient to meet the government expenditure. So kailangan po yung fund na nakukuha natin through tax is dapat um, sufficient siya para maano yung ma-meet yung government expenditure natin. Tapos din ang government dapat po hindi po siya lalagpas sa pag-spend ng money more than sa kinikita nito para hindi po magka-problema yung government. Next naman po is yung equality or theoretical justice. Taxes must be based on the taxpayer's ability to pay. In creating the law, they must consider the capacity or the ability of the taxpayer to pay the tax. They should know who they are taxing and who will pay these taxes. Yun nga po. Dapat din po medyo makatwiran po yung ano ng tax sa mga tao. Dapat po kayang bayaran ng mga tao yung tax nila. Hindi po sobra-sobra yung pinapataw na tax sa mga tao. Di ba meron po tayo ngayon yung bagong tax law po, which is pag nasa mababa, nasa 250,000 yung kinikita mo annually, hindi ka na subject, parang hindi ka na itatax. Parang ganun po. So, yun po. Next naman is yung administrative feasibility. Tax law must be capable of being effective enforced. So, yun po. Dapat po, na-i-enforce po yung mga law natin. Next slide po. Next is the theory of taxation. These are sets of acceptable beliefs that explain and guide our lawmakers in making tax laws. The first theory is the necessity theory, or the theory of taxation. The power to tax is an attribute of sovereignty emanating from necessity. The reason why there is tax because there is a need for the people, the need for the protection, shelter, health infrastructure, education, and other needs po. Because of these needs, there must be a source of fund where the government could accommodate the need of their people. That's why meron po tayong tax. Next is the lifeblood theory. Without taxes, the government would be paralyzed for lack of motive, power to activate or operate it. Siyempre po, kung walang tax, walang kitang government, wala pong project yung government. So yun po. Kaya yung tax po ang nagpapatakbo sa isang government po para makapaggawa ito ng mga project. Next is benefit protection theory or the reciprocal duties theory. There is a symbiotic relationship between the state and the citizen. The state being the provider of protection, shelter, health, infrastructure, and education, and in return, the citizen must compensate the government for this benefit received by the citizen. Next po. Next is the BIR policy direction on e-commerce. The government in general and the Department of Finance and the Bureau of Internal Revenue in particular have thus far not made any formal pronouncement regarding the specifics of taxation of electronic commerce. Existing laws, regulation, and circulars have not been amended to provide for the particular tax treatment applicable to e-commerce. During the deliberation of RA 8792 or the E-commerce Act, several legislators have actually raised a number of taxation issues. Nevertheless, the legislators have actually raised a number of introduced tax matters in the bill. For to do so would be like rewriting a whole set of codal laws over something which has not yet fully evolved in the Philippines. Then, but the PIR is not uh, unaware of the concept and challenges presented by the information technology that underline this new way of doing things. It has keenly observed developments in this field and has taken due notice of the outcome of international symposia and convention on e-commerce taxation such as the APEC OECD Symposium on International Business Taxation and the latest OECD report on the taxation framework for electronic commerce. Next po. Um, Next is the national tax law. Tax law in the Philippines covers national and local taxes. National taxes refer to the national internal revenue taxes imposed and collected by the national government through the Bureau of Internal Revenue, and local taxes refer to those imposed and collected by the local government. The Tax Code of 1997 revenue issuances and BIR rulings pertaining to the national taxes are posted at the BIR website po. The number one is the 1987 Constitution. The 1987 Philippine Constitution sets limitation on the exercise of the power to tax. All money collected on any tax levy for a special purpose shall be treated as a special fund and paid out for such purpose only. If the purpose for which a special fund created has been fulfilled or abandoned, the balance, if any, shall be transferred to the general funds of the government. Next is the law. The basic source of Philippine tax law is the National Internal Revenue Law, which codifies all taxes provision, the latest of which is embodied in Republic Act number 8424. Um, Local taxation is treated separately. However, special law that has special that is separately provides special tax treatment in certain situations. Next is treaty. The Philippines has entered into several tax treaties for the avoidance of double taxation and prevention of fiscal evasion with respect to income taxes. At present, there are 31 Philippine tax treaties in force. Copies are available also some BIR library and the Internal Tax Affairs Division of the BIR. Next slide po. Administrative materials. The Secretary of Finance, upon the recommendation of the Commissioner, promulgates needful rules and regulation for the effective enforcement of provision of the tax. Code. The Commissioner of Internal Revenue, however, has the exclusive and original power to interpret the provision of tax code, but subject to review by the Secretary of Finance. Ang administrative issuances may be relied upon in interpreting provision of tax code. Itong administrative issuances ay kailangang pirmado po ng Secretary of Finance or ng Commissioner of Internal Revenue o ng kanyang otorisadong kinatawan po. At ito ay pwedeng maging revenue regulation, revenue memorandum order, revenue memorandum ruling, revenue memorandum circulars, and BIR rulings po. Next is the case law. In the Philippines, Supreme Court decision form part of the law of the land. Such decision by the Supreme Court in the exercise of its power to review, revise, reverse, modify, or affirm on appeal or certiorari. As the law of the rules of court may provide final judgment and order of lower court cases involving the legality of any tax, imposed, assessment, or toll, or any penalty imposed in relation thereto, are adhered to and recognized as binding interpretation of the Philippine tax law. Court of Appeals and Court of Tax Appeals decision which have become final and executory are also recognized interpretation of the Philippine tax law. Um, Next naman po is the treatises and other books. There are no Philippine treatises exclusively devoted to Philippine tax law, but meron po tayong mga authors na um, nag-came up ng mga libro na mayroon silang interpretation ng version nila ng tax code. These books can be purchased po sa Rex Bookstore and Central Law Publishing. Next po is, next slide po. Hello po. Next slide po. Hello po.
Nakatulog na ata. Eh sir, sa periodicals na po.
Ako periodicals na po. Salamat po. Nasa periodicals na?
Yes po sir.
Ay, hala, ano na yung ano ko. Sige po. Periodicals on Philippine tax law are the first po. Ay, explain ko muna. Periodicals on Philippine tax law, ito po yung mga parang magazine or that talks about Philippine tax law. Isa po sa bale, meron po tayong tatlo. Philippine Revenue Service po, published by the BIR from 1969 to 1980. Second po is the Philippine Revenue Journal, which was both published by the Bureau of Internal Revenue from ayun po, nasa pareho po tayo din. Ma'am Eunice, yung slide po ko, Ma'am Eunice.
Go ahead, sir.
Okay. Next is the periodicals. Periodicals on the Philippine tax law. Ito po yung magazine or newsletter po na wherein nakalagay yung mga tax law news. First po is yung Philippine Revenue Service, published by the BIR from 1969 to 1980 po. Next naman is the Philippine Revenue Journal, which was both published by the Bureau of Internal Revenue from 1969 to 2000. And next is the Tax Monthly, published by the National Tax Research Center. Bale, itong mga to is available, yung copy nito is available at the BIR Library and the NTRC po. Next is the Local Government Tax Law. The local government taxation in the Philippines is based on the constitutional grant of the power to tax to the local government. Local taxes may be imposed as the Constitution grants to each local government unit the power to create its own sources of revenues and to levy taxes, fees, and charges which shall accrue to the local government. With respect to the national taxes, local government units shall have a just share as determined by the law in the national taxes which shall be automatically released to them. However, certain taxes such as the following may not be imposed by the local government unit. Um, Bali, ito po yun. Unang-una po is yung income tax. Next is documentary stamp. Next is taxes on estates, inheritance, gifts, legacies, and other acquisition mortgage cosa. Number four, customs duties, registration fees of vessels, and taxes, fees, charges, and other imposition upon goods carried into or out of or passing through the territorial jurisdiction of local government. Next naman po is the National Tax Research Center. Constituted under the Presidential Decree 74, the NTRC is mandated to conduct continuing research in taxation, to restructure the tax system and raise the level of tax consciousness among the Filipinos, to achieve a faster rate of economic growth, and to bring about a more equitable distribution of wealth and income. Specifically, the NTRC performs the following function po. First is undertake comprehensive study on the need for additional revenue for accelerated national development and the source from which this might cost equitably be derived. Next is to examine the existing tax system and tax policy structure. Um, Third is conduct researches on taxation for the purpose of improving tax system and tax policy. Fourth is the pass upon all tax measures and revenue proposals. Fifth is recommend such reforms and revision as may be necessary to improve revenue collection and to formulate tax policy and more efficient tax structure po. Next po. Next is the tax code. Um, uh, Title 1, Organization and Function of the Bureau of Internal Revenue. Uh, The Bureau of Internal Revenue shall be under the supervision and control of the Department of Finance, and its powers and duties shall comprehend the assessment and collection of all national internal revenue taxes, fees, and charges, and the enforcement of all forfeitures, penalties, and fines connected therewith, including the execution of judgments in all cases decided in its favor by the Court of Tax Appeal and the Ordinary Court. The Bureau shall give effect to the administer the supervisory and police power conferred to it by this code or other laws. Next is Title 2, Tax on Income. Income tax is a tax on a person's income. Emoluments, profits arising from property, practice of profession, conduct of trade or business, or on the pertinent items of gross income specified in the Tax Code of 1997 as amended, less deductions, if any, authorized for such types of income by the Tax Code as amended or other special laws. Next po, next slide po. Who are required to file income tax returns. First is the resident citizen receiving income from sources within or outside the Philippines. Next naman is the non-resident citizen receiving income from sources within the Philippines. And third are the aliens, whether resident or not, receiving income from sources within the Philippines. And then meron din naman po tayong for non-individual, hindi ko po siya nalagay sa slide, pero corporation, including partnership, no matter how created or organized, and then domestic corporation receiving income from sources within and outside the Philippines, foreign corporation receiving income from sources within the Philippines, and last yung estate and trust engaged in trade or business. Lowered and simplified personal income taxes. Ito po yung sinasabi ko sa kanina po. Under the train, those with annual taxable income below 250,000 are now exempt from paying personal income tax, while the rest of taxpayers, except the richest, will see lower taxes ranging from 15% to 30% by 2023. To maintain progressivity, the top individual taxpayers whose annual taxable income exceeds to 8 million face a higher tax rate of 35% from the current 32% po. Next po. Balik po pala muna, pasensya po. Bale, inform ko lang din po, filing of tax returns may be done electronically din po via internet. In fact, the BRR is now securing the appropriate software solution for this endeavor po. Tapos, electronic payment of taxes din naman po, established practice now is that all tax payments are made directly with the bank. Since the banking industry is one of the foremost user of e-business methods po. Next po is, next slide na po. Yan po, estate and donor taxes po. Estate tax, the usual tax associated with death is the estate tax. It is the tax on the fortune left by a deceased before this is distributed to their heirs, which is levied, assessed, collected, and paid upon the transfer of the net estate. Present tax rate is 6%, which is imposed on the value of the net estate. Next is the donor's tax. This tax is imposed on a gratuitous transfer of property. Debit assessed, collected, and paid upon the transfer by any person of a property by gift or donation. Previously, the tax was imposed at a graduated rate of 0% to 15% and a higher rate of 30% if the beneficiary is a stranger. Next slide po. Title 4, Value Added Tax. Any person who in the course of trade or business sells, barters, exchange, leases goods or property, tenders services, and any person who imports goods shall be subject to the VAT or value added tax imposed in section 106 to 108 of this code. The value added tax is an indirect tax and the amount of tax may be shifted or passed on to the buyer, transferee or leasing of the goods, properties, or services. This rule shall likewise apply to existing contracts of sales or lease of goods, properties, or services at the time of effectivity of Republic Act number 7716. Na-mention po kanina yung indirect tax. Bale, meron po tayong tinatawag na indirect tax. Ito po yung tax po na pinapatong sa goods at saka services na nire-render natin. Tapos meron din po tayong tinatawag na direct tax. Ito naman po yung binabayaran natin directly like yung income tax po natin. Next is the expanded value added tax or EVAT. The extended value added tax law is one of the instruments of fiscal reform in the Philippines, also known as the RA337. The EVAT law was passed on May 11, 2005 by the Senate. This law implemented taxation on commodities that is in the past were tax exempt, such as petroleum, electricity, and services to name po. Aside from this, the law also increased sin tax or taxes on alcoholic beverages and cigarettes po. In February 2006 po, the extended value added tax was increased from 10% to 12%. In addition, corporate tax also moved from 32 to 35%. Through this new law, the government was able to obtain additional revenue of 81.4 billion in 2006 po. Next slide po. Title 5, other percentage taxes. Any person whose sales or receipts are exempt under the section 109 of this code from the payment of value-added tax and who is not a VAT registered person shall pay a tax equivalent to 2% of his gross quarterly sales or receipts, provided that cooperative shall be exempt from the 3% gross receipt tax herein imposed. Um, Nagkakaroon lang po tayo ng percentage tax pag meron tayong sales or nag-render tayo ng service po. If yung transaction po is na subject na po sa VAT, hindi na siya pwede ma-subject sa percentage tax. At kung yung transaction naman po ay na-subject na siya sa percentage tax, hindi na siya pwede ma-subject sa VAT po, except po from business tax. Then if a person po is exempted from VAT, pwede siya ma-subject sa 3% tax. Depende yung tax base whether gross quarterly sales of gross quarterly receipts. Exemption from percentage tax of gross sales receipt must not exceed po 500,000 pesos. Pero if yung gross annual sales po natin is nag-exceed ng 3 million, yung business po will be no longer subject to other percentage tax but subject na po siya for VAT. Next is the Title 6, excise taxes on certain goods. Excise taxes applies to goods manufactured or produced in the Philippines for domestic sale or consumption or for any other disposition, and to things imported as well as services performed in the Philippines. The excise tax imposed herein shall be in addition to the value-added tax imposed under the Title 4 po. For purposes of this title, excise tax herein imposed and based on weight or volume, capacity, or any physical unit of measurement shall be referred to as specific tax. And an excise tax herein imposed and based on selling price or other specified value of the goods or service performed shall be referred to as ad valorem tax po. Next slide po is issues and problems on taxation in the Philippines. Number one po is we have some of the highest income tax rates in the region po. The Philippine tax system currently has some of the highest income tax rates in the region compared to our major ASEAN counterparts. Our corporate income tax is the highest po at 30%. Kaya po yung mga investors po, foreign investors po, nag-iismaya po mag-invest dito sa bansa natin. Kasi po, medyo mataas nga po yung tax na pinapatong natin. Mas pineprefer nila mag-business na lang sa neighboring country natin kasi mas mababa yung tax nila. Meanwhile naman po, our maximum personal income tax rate of 32% is not the highest po. It is Vietnam po at saka Thailand po kasi 35 po yun sa kanila. Pero po, kagaya nung sinabi ko kanina, di ba meron po yung pag umaabot yung 8 million, so pwede pong maging 35% yung personal income tax yung ng isang tao po. Tapos yun po, kahit 32% po yung sa atin po, dito sa bansa natin, siyempre, malaking number pa rin po yun. And malaking bagay, ano po yun? Opo. Malaking bagay pa rin yung 32% po. Kung i-compute natin yun. Kasi sa halimbawa, sa isang daan, 32 pesos na din yun na ibibigay natin. Parang ganun po. And then next po is too many goods and services are not being taxed po. In the Philippines po, yun nga po, maraming goods and services na exempt po from taxes. For instance po, our value-added tax law has 59 lines of exemption po. More compared with the VAT laws of our neighbors. The plethora of exemption partly explain the relative low tax revenues we get. If only fewer goods were exempted, or if only the exemption were limited to essential goods like raw food and medicine, then the government could boost its revenue. Isa nga po sa principle of taxation is a good way to reduce high tax rates is to expand the tax base po, or the set of goods and services which are taxed. The same tax revenue can be collected as before by imposing a lower tax rate on as many goods and services as possible. Next po is, ito po, yung number 3, too many people are evading the tax system. Common to, lagi ko nating naririnig. Too many Filipinos can get away with not paying taxes po. Obviously, there are the tax evader who are nearly impossible to catch and prosecute uh, given our overly strict bank secrecy law. In addition, compensation earners or those who earn salaries or wages end up paying more in taxes than self-employed. And the professionals, as a result, from 2010 to 2013 po, compensation earners earned 60% of total income in the county but paid as much as 80% of all taxes. Uh, Number 4 po is our tax system is too complicated. Uh, our tax system is overly complicated and burdensome, especially for small taxpayers. A 2015 study found that the Philippines ranked 127th out of the 189 economies in terms of ease of paying tax. Another study also revealed that the complexity of tax regulation and our high tax rates are some of the most problematic factors for doing business in the country. Gaya po nung sinabi ko po kanina na nadidismaya po yung mga foreign investors po na magmuha ng business dito dahil mataas po yung tax natin. Rich Filipinos are not paying their fair share of taxes. Yung panghuli po, the Philippine tax system is only mildly progressive and even borderline regressive. In many instances po, poor Filipinos effectively pay a larger fraction of their income taxes. For example, tax rates on dividends and other forms of capital income are so low compared to the tax rates of ordinary workers. Increasing this capital tax income tax rates will certainly help make the rich pay more in taxes po. Next slide po. Ayun po. And that's the end of my presentation po. Maraming salamat po sa pakikinig and God bless po. Dean, tapos na po ako. Salamat po.
Din, nakamute po kayo din.